Hi and Assalamualaikum. I'm Anissha. I'm a presenter from Group 5. We will present about the purchase and payment cycles. Our group member are consists with 5 persons. The first one is NURUL BINTI SALEHUDIN with matric number 272719. Next one is ALFIN NAJIHA binti KAMISAN with matric number 272816. And me, Anissha Nabilla binti JAMAL 272837. And one MAISARAH binti Muhammad AKMAL with matric number 273097. And the last person is PUTRA ZUHAILIE AMMAR bin PUTRA AZRONIE with matric number 273477. Now we will start our presentation. The purchase payable and pay cycle consists two types of transaction. The first one is purchase cycle and the second one is a cash payment cycle. The most common journal entry for this transaction are debit invoice or expenses and credit invoice. As you can see, this is a purchase and payment cycle. The process begins with a purchase request made by the employees, then the documents sent to the purchasing department and the employee do the purchase to the supplier. Next, the ordered goods arrive at the next department and the company issue a receipt certificate and the record will be sent to the account payable. They reconcile the received good with the supplier invoice and post the unpaid goods. Overview. Obtain sufficient audit evidence of transaction and balance to ensure that invoice for purchases of goods and service and cash payment for such purchases are presented fairly in accordance with generally accepted accounting standard. In addition, all purchases are recorded under value and all payable arising from credit purchases are recorded. As you can see, classes of transactions are divided to the three types. The first one is cash disbursement, the second one is purchase acquisition of goods and services, the third one is purchase return and allowance and purchase discount. On this slide, you can see the class of transaction, account that be used, business function and document and records that involved in the transaction. Now, I will pass to the next presenter.
My name is MAISARAH binti Muhammad AKMAL and my matrix number is 273097. Now, let's continue with the functions in the purchase cycle and its documents. There are 5 functions which are requisitions of goods and services, preparation of purchase orders, receiving and storing the goods received, reviewing and approving the supplier's invoice, and lastly, to record the liabilities. The first function is the requisitions of goods and services. The document here is a purchase requisition form, which it has all the details such as the goods name and its quantities. This document helps to achieve audit objective, which is occurrence to prevent fictitious transactions. The next function after requisition of goods and services is the preparation of purchase orders. The important document in this function for auditors is the purchase orders. This will ensure the audit objective of occurrence and the completeness are achieved. The third function is receiving and storing the goods received by the storekeeper, where it will be sent to the warehouse. The document in this function is a pre-numbered goods received notes, where it is prepared by a storekeeper. This document will be an audit evidence to support the occurrence of the transactions, and the sequence number on it will be checked for completeness to ensure that there is no fraud or fictitious transactions. Next is to review and approve the supplier's invoice by the accounting department. The important document here is the supplier's invoice, where the accounting department will record the invoice from its serial number. This is done to make sure that the payment is to a valid supplier. It is also done to ensure that the audit objectives of completeness, occurrence, accuracy, and classifications are met. The last function is recording the liabilities, where the accounting department needs to make sure that all of the purchases transactions are recorded and there is no missing transactions. These are a few steps that they can do to ensure that the amounts recorded are correct. All of this is done to ensure that it will achieve the 4 audit objectives, which are occurrence, accuracy, completeness, and cut-off. For cash payment transactions, there are 2 processes, which are paying the liability and also recording the payments made. Both of these need to be done properly so that there will be no issue of fraud or unauthorized payments. It also needs to be controlled properly so that there will be no false findings by the auditors, and they will also achieve the audit objectives. Now, let's continue to the next part of this presentation.
Hi and Assalamualaikum. My name is NURUL SAFIAH binti SALEHUDIN, metric number 272716. So, performing audit plan development is very important to get an understanding related to the entity as well as its internal control over the company purchase and payable area to ensure that the company purchase and payable transaction meet the audit objective of existence, completeness, accuracy, classification, timing, posting, and summarization. So now, I will discuss about the internal control and audit procedure to identify risks related to the company purchase and payable transaction. Firstly, audit need to understand the entity to identify inherent risks by identifying the entity business environment that might lead to the risks that connect with purchase and payable. It is because there may some potential issue that may occur in this area, such as unrecorded purchase issue, to reduce their debt due to need to disclose high level of working capital and to produce a more favorable profit. Next, auditors should obtain an understanding of internal control over the purchase and payable area by preparing a written explanation to give a clear vision about the control over the company purchase and payable. So thirdly, the auditor may assess the risk of material misstatement by check the company purchase whether it has the potential to the risk to being understated due to the pressure to record a high profit. Lastly, auditors should design for the audit procedure such as control tests to ensure that the company internal management are performing their job effectively.
Assalamualaikum and salam sejahtera. My name is Putra bin Putra AZRONIE. My metric number is 273477. So today I will be talking about the test of control. So what is test of control? Test of control is a way of evaluating a company's internal control. So it is for to avoid any major misstatements in the company of internal control. So what is it important for? So it is important for to keep the financial records is correct, to keep the companies going in the right way. So moving on with the next part, we're going to know about the methods of control. So one of the methods is inquiry. So what is inquiry? Inquiry is a way of auditors can acquire the sample from the client, the audit sample from the client, just asking them about the process of their internal control. So it is concluded as a test of control. So moving on with the next part is observation. So what is observation? Observation is a way of the auditors to observing or monitoring their business transaction, their business process, and help in a way they can control. And next is they can also observe their year-end inventory counting information is one form of observation audit sampling. So for the third method is re-performance. So the auditors can create a new way of transaction to help to replicate or help the internal control. So in addition to passive observation, this is one of the most accurate way of showing the test of control. So for the last method is inspection. So inspection is just the reviewing or inspecting the papers to check their signatures, their check marks and stamps. So for this, the auditors just choose a few sample. If you have enough samples, if you have more than enough sample, it means that the company have a good internal control. If it's not, it just have a poor internal control mechanism.
We present the substantive procedure. It is prepared based on preliminary assessment of control risks. It is to identify the material misstatement at assertion level. The auditor may use professional judgment to determine how detailed the substantive procedures are. For the designing the substantive procedure, the most effective should be performed is when the plan level of detection risk is low. It is to reduce the detection risk when the possibility of material misstatement remaining undetected. Next is the type of substantive procedure. There is three types. First is analytical procedure. Second, test of details of transaction. Third is test of details of balance. Before doing the procedure, the auditor should perform first, conduct an initial procedure. Second, reconcile to the ledger. Third, review unusual entries. Lastly, perform the calculation and compare all listing of account payable. For the first type, which is analytical procedure, it plans to confirm expectation and perform in 4 stages. One of each stages is to review the understanding of the entity as to whatever any changes to payable balance are to be expected. For the second type, which is the test of details of transaction, it is used to verify the test of details of balance and usually perform interim audit and in the form of dual purpose test. It is using documentation by vouching and tracing. As you can see in the slide, this is the one of example of substantive procedure. It is about the purchase transaction. In the table, we can see that first is occurrence. It will select sample from purchase journals and trace to purchase requisition, purchase order, suppliers invoice, and good receipt notes. Second is completeness, accuracy, cut-off, and lastly, classification. For the last type of substantive procedure is the test of details of balance. It reviews the obtaining of evidence for account payable balance. The debit or credit transaction does not really matter, but the balance at the end of the period is important. It includes 3 tests, which is... For the last type of substantive procedure is the test of details of balance. It reviews the obtaining of evidence for account payable balance. The debit or credit transaction does not really matter, but the balance at the end of the period is important. It includes 3 tests, which is... This is the 3 tests that include in the test of details of balance. First is review of monthly payable reconciliation. The difference between the supplier statement and client's records are mostly due to goods and cash in transit and disputed amounts. Second, confirmation of balance. The confirmation does not provide evidence of completeness, but it provides evidence as to the existence, obligation, and valuation of account payables. Third is investigating for unrecorded liabilities. It is to examine subsequent periods, purchase and payment transactions. Lastly is the disclosure. First, review the list of account payables and determine their categories such as amounts to related parties. A separate disclosure should be made. Second, review any debit balance in the payable list. Third, review the minutes of meeting or any supporting documents such as contracts for any information on loan.
In conclusion, we know that purchase and payment cycles are included as a gain and loss account. And we know the issue that I will face in account payable in auditing is the completeness of item. So, we need to understand the function of buying in cash and credit before starting do the auditing from document that involve. And we need to identify the internal control to be implemented. And the last one, we need to identify the assertion and related audit objective, the risk to be controlled, and the substantive tests that should be performed. That's all from us. Thank you.